Do you know where you're going in your trades? That is, do you have targets? Moreover, are your targets possible, realistic? Earlier this week with the sterling versus US dollar at 132, someone on Forex Live commented, "It's not where the sterling has been, it's where it's going. 125, here we come." That 125 level is a place to go, but 700 pips? Is it possible? Is it how we should look at our trades? Let's talk about it. There's a quote I love which is attributed to St. Francis of Assisi. He said, "Start by doing what's necessary, then do what's possible, and suddenly you are doing the impossible." That trader who sees the sterling versus US dollar going to 125 has implied doing what is necessary. He or she is selling. That necessary selling may be spurred by a story like no deal Brexit. For me, with what I do and teach from a technical perspective, I hope it might also be partly influenced by the trader leaning against a key technical level or levels where the crowds gather. Remembering from my last video, No Man is an Island, traders need to lean against technical levels so that risk can be defined and limited. If wrong, you lose a little. If right, you make more than a little. Whether trading decisions are based on fundamental or technical reasons, or both hopefully, we as traders are called to trade. We are not called to be spectators, but are called to take action, to take bold action, like do I buy or do I sell, and where? Trading is necessary if we are to be a trader. As St. Francis said, we must start by doing the necessary. The next step, according to St. Francis, is that we need to do what is possible. It is the possible part that most traders start to get all messed up on. However, doing the possible is what gives us a chance to do the impossible. More on that a little later. Now, some of you may argue that 700 pips is possible, and by looking for that type of gain allows us to have conviction, to make it happen, to be committed to our position. However, imagine what needs to be done to make that possible. Looking at the daily chart from when the comment was made earlier this week, there is a lot of room to go from 132 to 125. It's a long journey. Not only is it far away, but it will take time to get there. Fundamentally, as we drive down that bearish road to our destination, there are a lot of things that could derail the no-deal Brexit story over that time. It's simply not possible to predict how the fundamental story might change over what will be an extended time period. Technically, the picture can change well before the 700 pips is reached as well. As a result, we need to be realistic about what is possible and manage our trades by taking steps from one possible level to the next possible level. Those steps need to be realistic in terms of distance traveled and time needed to travel. I call possible points targets. Targets are defined by technical levels that the crowds can see. They are where the crowds of traders will next gather if the momentum in the direction of the necessary trade continues. If the crowds of traders can push the price through that next closer target, it opens a door to target the next possible point. Once that is reached and surpassed, you can go to the next possible target. If all goes well, if the fundamental story remains the same and the price action does trend from one possible target to the next possible target, suddenly you may be doing the impossible. The 700 pip target may be reached. So what does all that look like on a chart? How do I map the possibles that may suddenly lead to the impossible? Looking at the daily chart here, if I were to do the impossible, that is, get to the 125 level, it would require getting below the trend line here that has 3 points on it. At that level is also the 38.2% retracement. That area comes in at the 131.25 level. Already we can see that it's going to be a good support level. Next, it would require getting below the 200-day moving average, the green line here. The last time when the price went to test it, it failed on this break. Can it get below on another test and stay below? After that, it would require getting below the 100-day moving average, the blue line. Also at that level is a 50% retracement of the move up. Because both those levels are at the same point, it too will be a tough nut to crack and will likely draw profit takers or dip buyers. Assume we get below that key area and other targets will map out and need to be breached as well. Looking at that long journey from the 132 level to 125 and mapping the quote-unquote possibles along the way, that is, the targets, makes a trip seem a bit shorter. We have to go shorter distances. However, it also shows a difficulty in the journey. In fact, the first 2 of 3 possible targets have 2 reasons that may stall the fall from a technical perspective. Knowing that by mapping the possibles should give you needed information to manage a trade with more clarity. So what happened? Well, the price did go down and the price was able to extend below the trend line and the 38.2% retracement. However, traders were not able to extend below the 200-day moving average and the sellers suddenly turned back to buyers. The price ended up retracing all the way up where the momentum slower started. We're back to where it all began and a far way from the 125 level. So let's take it a step further by using possible targets to help manage a trade. By managing the trade, you can preserve profit by using the technical targets as new necessary trades. Let's take a look at the euro versus US dollar on the hourly chart. When the price was racing higher here, I posted the following. Euro versus US dollar may have cause for pause, but hard to stop a freight train. Tests underside of the broken trend line. Doing the necessary trade might be selling against the trend line with the stop above. Now, what's the possible? That is, what's the possible next target? Well, the 114.18.8 and the 114.08 levels are the first possible targets. They are swing highs from the end of February and the beginning of March. These levels right here. Below those levels, a trend line here would be a possible target to get to and through. It was broken earlier in the day but surged above on the way to the highs. After that, the 100-day moving average will be eyed, followed by the 100-hour moving average and the 38.2% retracement. At that 38.2% area, from 113.42.6 down to 113.38, there are a lot of swing lows and highs as well. As a result, it should be a tough area on a test. I like to highlight those areas in bright yellow. So what happened? The price is able to get below the first possible target at the 114.08 to 18.8 level. Getting below that level is just like taking a new necessary trade. On a new trade, you want to put a stop. A logical stop level would be a few pips above the 114.18.8 level, let's say 114.25. You're hoping that the market starts to tilt the buyers to sellers. You have a locked-in profit on the trade as well. The next possible target is the trend line. It too is broken here at 113.85. Once again, breaking a possible target is like a new necessary trade. The highs through here come in at 113.96. Putting a stop above the 114 level seems like a logical level to stay below now and keep the bearish bias. The next possible target is the 100-day moving average. This one should be tougher. Not only is it a key moving average level, but before breaking above it here, the price stalled ahead of it here and here and here. In addition, the 100-hour moving average is close by now. For some traders, including myself, getting to this area may have seemed like an impossible task when the necessary trade against the trend line up here was done. After all, remember, the freight train was running. Moreover, there is the additional support near the 38.2% retracement and swing levels through here. So take profit and be happy with it. By doing the necessary, targeting what is possible, you may find that your trading is suddenly doing the impossible. Thanks, St. Francis. If you like this video, just click the thumbs up. It is important to me and apparently YouTube as well. If you don't like it, click the thumbs down. It's your vote. Also put a comment, great stuff, loved it, or something more or less to that effect. My name is Greg Michalowski, and remember, you can do the impossible in your trading, but you have to do the necessary and possible first. Good fortune with your trading. Bye-bye now.